We are moments away from the start of trading in U.S. markets, and futures are lower. Welcome back to Bloomberg Open Interest. I'm Matt Miller. You're looking at drops not as severe as we saw earlier after Ukraine fired American-made missiles into Russian territory. S&P futures are down 0.6%. We had been down 1 full percent. You do see it more on the small caps. Russell 2000 futures down more than 1%. Take a look at who's ringing the bells today. It's not always, I grant you, terribly interesting. But Jeremy Grantham is ringing the bell at the New York Stock Exchange, celebrating the one-year anniversary of his ETF, the GMO ETF. I think Quality is the name. At least that's the ticker, QLTY. It's slightly underperforming the S&P, but only by a couple of percent. So it's up like 27. The S&P is up 30%. You've got Veeco ringing the bell over at the NASDAQ. Veeco Instruments actually down year to date. They were doing well up into the summer, and now they're off about 15% year to date. Nonetheless, they seem terribly pleased. Let's get a check on the major averages as we kick into the first minute of trading right now. We are looking at, obviously, drops here, 0.5% on the S&P to 58.62. So we now have seen only about a 1.5% gain since the November 5th election on the major on the benchmark index. NASDAQ down about 0.5%. The small caps down a little bit more. In terms of stocks to watch, you've got really up arrow stories in terms of the single stock stories. Walmart, right, doing better than anticipated as usual on sales, but also raising its forecast for the full year. You can see the stock up 3.6% in a down market. So I think, Shonali, that really says a lot about how much investors value Walmart at this time.
But you had a really interesting point earlier that you made about recession-proof Walmart, that it does well even in recessions. I've got some down arrow stories over here, Matt,
Thank you,
that are not tied to geopolitical conflict, but are tied to the U.S. government. We're keeping an eye on Google. The DOJ pushing the tech giant to sell off its Chrome browser to break up its alleged monopoly, but you only see Alphabet now down about 0.1%. It is erasing some of those losses on the morning. Also watching Supermicro soaring after hiring a new auditor and filing a plan to come into compliance with NASDAQ listing requirements. Supermicro now up about 23%. We're also going to take a look at defense stocks because the latest escalation in Russia's war against Ukraine is rattling markets. We have Bloomberg's Abigail Doolittle here for more on that.
It certainly is rattling markets, Shonali. We have the defense contractors this morning higher, although not as high as maybe you would expect given the headlines of Ukraine launching U.S. missiles in Russia and also President Vladimir Putin's decree allowing Russia to use nuclear weapons in a wider variety of situations. On those headlines, it wouldn't be unreasonable to see these stocks up even more. Nonetheless, green on the screen. Let's put this into the perspective of the longer term picture, though, and we will see here going back to winter of 2022 and roughly the start of that war. What we're looking at here are some of the defense contractors. In purple, we're looking at SPY. In yellow, we're looking at Boeing, not a defense contractor, but certainly a big piece of their business is military. And the defense contractors really basically doing just right what the SPY is doing, whereas Boeing clearly underperforming. But there is one defense stock or ETF or asset that is outperforming, really shining, Matt, and that is gold. Take a look at GLD over the last year, hitting that record high not so long ago, and on the morning taking a tick higher, but up on the year 32.3%.
Yeah, so big gains there for gold. Obviously, well, I shouldn't say obviously. You would think it's concerns about inflation that drive gold higher, but inflation has been contained to some extent throughout the length of that chart, and yet it's a huge run-up.
Well, you have central banks buying gold at a greater pace across the world. It's a huge trade. Yeah. David Einhorn is sitting smiling somewhere.
Yeah, absolutely. Central banks buying is really, we've been told on a number of occasions, really the driver. Let's talk to Nancy Dowd right now. She joins us from Ameriprise Financial She's a private wealth advisor. Nancy, great to have you on the program again. Last time you were here was pre-election, and we were talking about the gains that we would see. Certainly in the first week, we saw some real gains. We've sold off, to some extent, the lion's share of those gains. Do you expect that we get that back, that optimism on deregulation, on cutting taxes? Does that come back into the S&P through year end?
Well, I believe, yes, that most likely it will because of the season. You know, year end is usually pretty strong. But let's, talk a little bit about post-election. There was this first of all, the first emotion was relief, like thank God it's over, regardless of which side it goes to, because I think we can all agree that election seasons have become very prolonged and quite exhausting. So that was one reaction. The other reaction also is that markets like more predictability versus uncertainty, and with the White House, the Senate, the Congress being aligned, there's a little more predictability. Markets clearly like less regulation, less taxes, and the unleashing of energy as has been promised. But like all knee-jerk reactions, the market corrected because, okay, we're back to reality. And the reality really has to do with most of this was priced in before the election. And it's time to really look at the math now.
Over the past week, you've seen the market reacting to a lot of realities. For example, the differences in regulation and policymakers. But what about today? For example, you're seeing the market react to geopolitical realities. But do you buy into the dip that you're seeing? Do you know, what is it? What is the saying? When others are fearful, get greedy?
Be greedy. Yeah.
Be fearful when others are greedy, and be greedy when others are fearful. I think that we're bound to see volatility. I think what's happening today is a reminder that, hey, we still have a lot of geopolitical risk out there, and the new administration has not taken office yet. So there's still a lot of room for some crazy things to happen. However, this is the season for pension contributions and consolidation and rebalancing, and most importantly, tax harvesting. So there will be some volatility, some selling and buying. And I think that if you've been on the sidelines all along, you've missed out a lot. And with the longer term outlook, you're going to miss out even more if you don't get into the game.
Yeah, I think Bloomberg has done some research and found that in the last quarter, you typically get a 4.1% gain. And then you mentioned tax loss harvesting. Investors use those gains to maybe go and buy back some similar shares in January, so they get the January effect. And then we'll have Donald Trump in the White House. And as you mentioned, it was a red sweep. So he's got the House, the Senate, and the White House. But thin majorities, right? So can he get everything passed that the market is hopeful for?
Well, we're going to find out.
Yeah.
However, with all three aligned, there's a little less gridlock, a little less politics, not much. There's always going to be uncertainty, but it's less uncertainty than prior, had we had a divided government. The biggest beneficiaries of all of this will be the financial sector, energy, and of course technology in the longer term. The unleashing of the energy is going to be great. These are the sectors that love deregulation. And as I always say, AI, it turns out that AI requires a lot of power, so the energy will be a big factor here.
When you think about the potential policymakers, one thing we talk a lot about on this program is what about the anti-competitive policymakers, the FTC, the Department of Justice? You're looking at the market, at least initially today, react on this idea that Google could maybe be broken up in some fashion. But would the Trump administration look to do similar things?
Well, I think there will be some deregulation, but maybe not to the extent that everybody thinks. I mean, the worst thing that could happen is the pendulum swings to the opposite end of the spectrum, which would never be good. The opposites are never a good thing for markets. Market likes balance, not too far one way and not too far the other way. And we look forward to that. Hopefully that's what's going to happen.
I mean, the AI play that you mentioned, we were talking about yesterday, how much money it's going to cost just to set up the infrastructure. Bloomberg estimates $1 trillion. Who was it? Moody's estimates $2 trillion in spending over 5 years, which seems to me a massive amount. Do you see other places to play that? Obviously, big tech. Everyone's in it. It's already run up, right? Are there sort of stones unturned that we need to look under?
Well, I think the fixed income market is certainly very apprehensive about this. They've been sort of like we're not reacting, we're not rallying like the stock market. And I think it's because there's a big concern that all of this will cause further inflation versus the continued steps towards curbing inflation. But yes, I think the longer-term prospects for technology will be very, very good. And the reason, again, is because of the unleashing of energy. And although there will be a lot of spending, the hope here is that the growth and the cost cutting will offset the majority of that.
Nancy, we thank you for joining us. And can you believe it? Just over 30 hours away until NVIDIA earnings.
Oh, yeah.
Like a very long time away. But of course, that will be another pivotal moment in the market. But before that, coming up, we're going to explore what might be a historic crackdown on one of the world's biggest technology companies. We've been talking about it, Alphabet. The details on that next. This is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. You're looking at stocks that are down across the board. Although the NASDAQ is doing much better than it had been at the top of the session, now off only 0.25%. The S&P 500 is still down 0.4%, and Russell 2000, the small caps, down about 2/3. So not as bad as it could have been, as it would have been had we not, I guess, gotten that headline from the U.S. saying they won't respond to Russia's expansion of the nuclear expansion that Vladimir Putin has signed.
Yeah, and as you've been talking about it, while the broader markets are lower, there are actually some stocks under the surface higher, and this one in particular is surprising, Alphabet. It was lower on the morning, now higher by 0.5% after a Bloomberg scoop that the Department of Justice is looking to force Alphabet, is forcing Google to sell its Chrome browser after a judge ruled that it was monopolizing the search market. If the proposal goes forward, it could reshape the online search market and the nascent artificial intelligence industry. Here with more insight now, Bloomberg Technology co-host Caroline Hyde. And perhaps, as you've been saying to us, Google now up more than 0.7%. Is the relief here that it's not Android?
Yeah, you've got to remember, all kudos to Leah Nyland and the team over who report on the DOJ. She has been on top of this from day one. And it was but less than a month ago she was hypothesizing that the government was going to push the judge in the case to look at selling off Android or Chrome or some other parts of the business to rectify the idea that this monopolizes search. Now, few is not going to be Android, it seems, but would they push for Chrome to be spun off? And indeed, who would be the buyer? There's lots of question marks here, but ultimately, this would be a big change to the business model. Ultimately, they are bigger than the sum of their parts because they've got about 60% market share when it comes to browser with Chrome. Then they have 90% market share when it comes to search. Many people use Chrome to then get to search. They know a lot about us when we sign into Chrome and then start searching. They can sell that on, use that data. It's incredibly important.
Yeah, I mean, if you use Chrome to save your passwords, then you're all across the net with it. And look, this is all interesting theoretically, but if you follow antitrust suits on either side of the Atlantic, you know that it takes decades to get to a result. So let's say they were successful in forcing Google to sell Chrome. Would it be 2044 before they actually have to do it?
Well, come April, I think the judge is going to be hearing some of the rectifying behaviors that would get out of Alphabet to ensure that it wasn't a monopoly. Come August, you then get the final view from this judge. Then you get the appeal, and many are feeling, look, the judge is probably going to look to precedent set with Microsoft when the appeal worked, when they weren't forced to break up due to causality, basically, was the argument there. So many feel that, yes, like Dan and Ives have been saying, this will take years in the making. I do think it weighs on the stock. I think ultimately that you're looking at price versus future earnings. We're looking at about a 20 times versus valuations. And look, compare that to Microsoft, which trades at about 30 times future earnings. We do have a slight cloud over when it comes to European and US views on Google and how monopolistic it is. But I think they can find ways to rectify this. They can also perhaps push back on some of the calls to be sharing data when it comes to AI. It looks as though the US government's going to be saying, look, we want you to share how you make search so good. Well, that's going to beef up competition in many ways.
Is it fair to say that when we think about the teeth of regulators around the world, that the UK Competition and Markets Authority perhaps has had even more teeth than US antitrust authorities and has been forcing these companies to do a lot of things, yet today is actually a pretty large day, isn't it? Because we do see that Anthropic investment cleared for Google.
Yeah, so in one ways, we've got the big headwinds facing in the US for Google and a view that it's monopolistic in search. And then over when you're looking at its AI investments, more than $2 billion put into Anthropic, the CMA is saying actually, A-OK with this. We don't think you're having too much say, too much control from a board or management level here. You can keep your investment in Anthropic. And of course, that builds out the artificial intelligence prowess of Alphabet and Google. Remember, from a cloud perspective in particular, it's helping with that side of the business. But maybe more the US DOJ side is the worry when it comes to AI overviews and the way in which we're starting to see our own data be populated, and indeed clients' data is used within AI overviews.
This is all, fascinating for the near to long-term future. But in terms of the immediate, Caroline, Shonali pointed out, we're almost there. NVIDIA earnings are going to be out in 30 hours.
Did you say 30 hours?
Yeah.
I love that you got this time.
So I imagine you'll be looking forward to that on your program.
I might mention it. No, look, this is the most valuable company. This is going to have the most powerful impact on the S&P 500. Remember, NVIDIA is 20% of all the run-up in the S&P so far this year. It is about 25% of all the earnings growth. It is integral. Look, we're looking for about an 80% increase in revenue. You're looking for profit when you're looking at net income to basically double. But the key factor here is how is the Blackwell system selling and how is it supplying? We've had a lot of concerns about ultimately the making of the Blackwell chip lineup. Latest reports out of the information worries that we're getting overheating when it comes to the overall making of it and redesign necessary. Look, yesterday NVIDIA came out and said, this is all expected. We are working closely with our cloud providers, and we know that this is just as it always usually is when you're trying to innovate in this way. In fact, Jensen Huang has been on the stage at yet another AI event over in Atlanta, and he's saying you're going to see 1 million times increase in compute power over the next decade. He is no way shying away from the fact that AI compute's going to keep on ramping up, and indeed AI power within large language models is going to get ever more, well, powerful through scaling laws. They still hold.
It's incredible. We are just over 4% lower than the all-time high this year for NVIDIA. You've got to wonder if after tomorrow we retest that level. We are not far off. Caroline, we thank you so very much for joining us. That is Caroline Hyde. Caroline will, of course, be taking a deep dive into Google and the antitrust issues later today. Sarah Olam, a senior fellow at the Technology Policy Institute, joins Bloomberg Technology today at 11 a.m. New York time. And coming up, is Trump's economic team finally taking shape? That's next in our Wall Street Beat. This is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Take a quick look at what's going on with stocks right now. We're still looking at losses, and I don't expect that to change. S&P 500 down a little more than 0.5%. Futures were down 1%. So at least some de-escalation from the U.S. government in terms of the Ukraine-Russia issue has calmed markets to some extent. NASDAQ off by 0.4%, and the Russell 2000 small caps losing by the most. One of the biggest gainers on the S&P right now is NVIDIA, followed by Walmart. In terms of points, obviously NVIDIA typically adds the most points because of its size. But Walmart and Google are right behind it.
And NVIDIA, as we've been talking about, less than 5% away from its high of the year. Earnings tomorrow. But time now for the Wall Street Beat. Another massive story of the morning. President-elect Donald Trump is said to be considering appointing Kevin Warsh, a former Federal Reserve official, as Treasury Secretary, alongside hedge fund manager Scott Bessent as director of the White House's National Economic Council. Bloomberg's senior Washington correspondent Saleha Mohsen joins us now with more. Has been watching Treasury closely for a very long time. And of course, this rat race, let's call it, into the top spot in Treasury in this next administration. How does the latest round of jostling really set the stage for what his economic team might look like?
Yeah, we still don't know who is going to be Treasury Secretary. And, I don't see how Trump can decide what the rest of the team can look like until he's filled and decided on a candidate for that very key post. We know what his economic agenda is. We know that he wants to go very strong on tariffs, and he wants a Treasury Secretary with Wall Street pedigree who will carry forth and implement an agenda that is heavy on protectionism.
So how does Kevin Warsh's resume look in that respect? You know, Neil Dutta has been saying for a couple of days now, Warsh is a hawk. And in terms of his positions on the Fed, he was very hawkish. But Sonali and I were talking about this earlier. Treasury is a very different position than being a Fed governor. He's still going to pursue a strong dollar policy, I guess. That's what most treasuries do. But he's going to have a broader remit in terms of tariff policy.
Absolutely. You know, we know it's very clear that an economic populist or protectionist agenda is very important to Trump right now. And he doesn't want too many free traders or any free traders in the room when he's making these key decisions to fulfill these promises to implement huge tariffs to rebalance trade. And so, yes, he wants someone with a Wall Street pedigree, but he also wants someone who will not be a bulwark to tariff and protectionist policies, but serve to carry those forth. Now, we've heard from Scott Bessent publicly talking about how tariffs are a great policy, not just for trade, but also foreign policy and national security. We don't know what Kevin Warsh's more recent comments are. I know that we looked up some of his past comments on air and in his writings that he has talked about how we should not, let protectionism seep through into our economy and our policymaking. But those comments are 10 to 15 years old.
Soleil, we thank you so much for your time, for all of your reporting. Don't miss it a minute by minute here as this drum beats into the final decision making. It is quite the score. Now, coming up, we are going to also talk a little bit more about the markets. But before that, we're going to bring you some breaking news here. Of course, Citadel's Ken Griffin speaking a lot this week, but currently now to Bloomberg News, we have a story out on the terminal saying something that is really resonating here with the hedge fund community. The idea that the multi-strategy hedge fund boom is over. Of course, he's the cream of the crop here in that world. He said in an interview to Bloomberg's Nishant Kumar that assets under management flows into funds are basically a push today. It's over, I guess.
That is interesting. Yeah, yesterday he was at Oxford and he said that the tariff situation makes him very anxious. But in terms of the U.S. economy, we would be returning to the business of business. And I guess Nishant in London got an interview with him. So we'll have more on Ken Griffin coming up. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Bassett. Katie Greifeld is off today. And coming up, Ukraine reportedly carried out its first strike in Russia using American-made missiles. Meanwhile, Putin fires a warning by approving expanded use of nuclear weapons. The U.S. says it won't respond. And narrowing the search, President-elect Donald Trump is said to be considering Kevin Warsh for Treasury Secretary and Scott Bessent for the NEC. And meet Miami's condo king. Billionaire real estate developer George Perez talks about money and power flowing into South Florida.
That'll be fascinating. You pointed out a story this morning that I think a lot of people have been talking about. There are private schools in the Miami area that are sitting in places too expensive for the teachers to afford.
Too hot?
So too hot. So they have to start, at least in one case, a $30 million endowment to help the teachers pay rent or get a mortgage. We'll get to more on that with George Perez a little bit later. I want to take a look at stocks right now. You can see that we're off on the S&P 500, just about 0.5%. It was 1% in the pre-market in the futures, and we've done a little bit better as the U.S. kind of de-escalates, saying that it won't respond to Putin's nuclear expansion. Third. Investors have been buying bonds for the last 24 hours, really, and the yield has gone down about 8 basis points from where it was this time yesterday at 437, 438. The yen strengthened a little bit. It's losing some of that strength, but you can buy 154 and change in terms of yen for your dollar. And Bitcoin currently at $91,895. It's not clear yet Bitcoin's sort of safe haven status. It was gaining more than gold this morning.
Yeah, you do have also that options trade taking off today when it comes to those Bitcoin ETFs. So there are other things under the surface,
yes,
but also broadly that haven trade lifting off a little bit in the market since the market opened.
All right, let's talk about how seriously geopolitics do affect these markets. Joining us is Abby Yoder, JP Morgan Private Bank U.S. equity strategist. And Abby, we were just talking in the commercial break. Last time you were here, there was a big geopolitical issue as well. But the effects seem to fade over time, right? There's so much going on in terms of the war in Ukraine, the war in Israel, and yet the markets seem undeterred to push higher and higher. Okay, we've taken off a little bit in the last week, but we're still at 5,800 and change on the S&P 500. How important are geopolitics when you're looking at the situation?
Well, I mean, look, they're important from a risk management standpoint. Like, we're not going to ignore them. I would say they're probably the biggest outstanding tail risk that is out there. But from an underwriting perspective, when we're thinking about investing, that's not our base case. It's not our core outlook, right? And so when we're thinking about it, and we've looked at this historically, actually, we've looked at 36 isolated geopolitical events that have happened since World War II. And we looked at, U.S. equity market returns over the following 6 and 12-month periods, and they're identical to periods outside of those types of events, right? So that suggests, the market might have a knee-jerk reaction, and you see that in things like gold, that is a safe haven. You tend to see that outperform. We're positive on gold, longer term, but I think that would be a boost in a way that a client can allocate in terms of if they are looking for a safe haven.
Well, one question I had is how much do you take these moments and use them as buying opportunities?
Yeah. Well, I mean, look, if the fundamental outlook doesn't change, which, look, we just released our 2025 outlook. It's called Building on Strength. We've rolled out our 2025 equity market outlook, and it is 6,400. And I think Building on Strength speaks to, continued trends and strength in things like AI, right, and tech that has continued to propel the market higher, but also a broadening out in terms of more cyclical parts of the market as well. Like, you have a lot of pro-cyclical reform or policy in terms of the agenda of the new administration, and I think that could help, reignite animal spirits from, like, let's say, the manufacturing sector in the U.S.
In terms of where you want to go, AI, big tech is one of the things we've heard from a lot of guests for a year. Energy is another one because of AI, but now also because of Trump, and the banks have been a big trade after the Trump victory as well. Are those your main areas of focus?
I would say not so much on the energy side, but industrials, utilities, we were overweight those sectors before. That really speaks to, the energy demand that is expected to increase over the next, let's call it.
It's always hard in my brain to separate energy and utilities, but I get your point.
I did say energy, right?
Yeah.
So that makes sense.
Yeah,
but 5 to 7 times the amount of energy is expected to be consumed over the next 5 years in the U.S. alone. So that means electrification. That means all of these different things that tend to benefit industrials and utilities. But with this outlook, we did upgrade financials, and we were warming to the sector prior to the election. You had a lot of positive things going for it. It was the best performing sector in October, and that was really driven by earnings, right? You have a good outlook for net interest income as the curve steepens. You've got benign credit conditions. You've got fee AUM that's increasing, which means increase in fees for those asset managers. And then you add on top of this deregulatory agenda that seems to be taking shape. You've really got all things working in terms of financials.
It was refreshing to hear you start with the financial story when it comes to the earnings and the actual numbers, because a lot of people are banking here on deregulation. My question, though, is how far can that deregulation trade go when you don't know how much certain industries will be deregulated?
Yeah, I think that's fair. I do think that there has been, whether or not it's under the radar, it's well known, a step function higher in regulation across industries, over the past 4 years. And obviously financials are kind of at the epicenter of that. But even if you think broader, let's think outside of financials, yes, they're a very regulated sector, but if you also have deregulation across all of these other different sectors, that means loan growth for financials as well, right? So I think from that vantage point, you've got a lot of things that are working for the sector. And again, you look at earnings revisions and they've moved higher in conjunction with price. So it's been based on fundamentals.
I think it's interesting that you highlight industrials as well, because a lot of people don't really mention that, but so necessary, right, to build data centers, to lay cable. And that will also be helped in a large part by deregulation, because we have, utilities coming in all the time and telling us we just can't lay cable because it's not allowed, or it takes 7 years to get a license to do it. How far do you think that trade can run?
Well, I think that's the risk. And that speaks to both industrials and utilities, right? The red tape and the politics around getting those types of things approved is what's really, I think, stalled a lot of that, what could have been improvement. I mean, we have a 75-year-old grid, right? We need these things to be done. And I think where there's an area of bipartisanship is around nuclear. And you've seen that, you've seen private deals between companies happening as well. But I do think that that's an area, and I think Bloomberg's work has pointed to $1 trillion in spend in terms of this data center build out. And we very much believe in that trend as well.
Abby, we thank you so much for joining us here on set. Of course, a lot to think about in this market, many cross currents. That is Abby Yoder of JP Morgan Private Bank. Now, let's get a look at the stocks moving under the surface this hour. We're going to bring in Bloomberg's Abigail Doolittle.
So it looks like yesterday's big move higher for Supermicro Computer could have been some of the shorts or other investors thinking, believing, and now knowing that the company was going to gain a new auditor, in this case BDO USA, and also submit a plan to NASDAQ to essentially file that delayed 10K and remain listed. Today, up 29%. It's so interesting, this stock that's been all over the map, basically flat on the year at this point. There is a 19% bear short interest. And again, that could be a big piece of these gains, a squeeze, those bears wanting out after lots of that bearish news has come out. Turning to the shares of Lowe's, they are a little bit lower, down 3.6%. They beat, but the comp sales down 1.1%. So that decline not seen as a positive omen. House sales plus high rates really restraining some consumers from making changes, especially big ticket changes to their homes. And then finally, if we take a look at the shares of DJT and Banked, there is the possibility that DJT, Trump Media and Technology Group, is going to buy the crypto exchange. We don't know that that's true on the year. DJT up 72%, Banked, or Backed, I should say, excuse me, down 41%. So not a bad deal if this deal does go through for DJT, Matt. Getting a discount. Big discount. On Backed, headquartered in Alpharetta, Georgia, apparently. A lot of people didn't know about Backed before, and it's been owned by
the ICE, Intercontinental Exchange. So it'll be interesting if DJT gets a hold of some crypto trade. Is crypto today? The crypto show?
The Bloomberg Crypto Show today at noon. We will be talking about it a little more.
Well, I will watch.
A lot of people have been talking about how much that Trump trade would merge with would merge together, right? DJT, more crypto. Is this the only move we'll see? Is there more social media that is more right-leaning? There's kind of a lot to talk about there.
Yeah, I mean, the presidency could really pay off. All right, coming up, Russia's war against Ukraine is escalating as the conflict enters a dangerous new phase. We'll have the latest on that next. This is Bloomberg.
Earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Let's get out of high interest. Look at what's making headlines around the world. The U.S. is saying it is not surprised by Russia's announcement that it would update its nuclear doctrine. Spokesman for the National Security Council said the U.S. won't respond to the move by Russian President Vladimir Putin. Earlier, Putin approved an updated nuclear doctrine, expanding the conditions for using atomic weapons after Ukrainian forces carried out their first strike on a border region in Russia using American-made missiles. President-elect Donald Trump the sentencing in his New York hush money case was adjourned by the court as the judge weighs how to handle the case in the wake of the election. The sentencing was called off without explanation earlier today, although it's understandable. The update comes on the same day that Manhattan District Attorney Alvin Bragg faces a deadline to give his recommendation on how the case should proceed. And billionaire Elon Musk is defending the embattled former Representative Representative Matt Gaetz, President-elect Trump's pick for Attorney General. Gaetz is under scrutiny from Republicans over House sexual misconduct probe that threatens to upend his confirmation. On X earlier today, Musk posts, quote, Matt Gaetz has 3 critical assets that are needed for the AG role: a big brain, a spine of steel, and an axe to grind. No mention of the sexual assault allegations. Sonali?
And Matt, we're going to turn now to both politics and geopolitics. Joining us now, we're going to talk to Anne-Marie Howard-Dern, of course, to talk about Russia's war against Ukraine. Anne-Marie, of course, is Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. How seriously is the current Biden administration taking this threat from Moscow?
So I think if you look at this as there's been 2 basically parallel escalations in one day. So we have Ukraine basically using ATACMS in Russian territory. It's on the border, but this was after the United States gave it the green light. And then, of course, you have Putin coming out, signing this decree, basically an edit to the posture of when they would deem necessary to use nuclear weapons. So you see escalation on both sides. I would say right now what we're hearing from the White House is that nothing has changed. They view this strictly as rhetoric. And I think that you would see the U.S. intelligence chiefs basically alert America, or they would maybe insinuate that they would have seen physical changes to posture. Right now, all this is rhetoric in this decree. But what we can see, and we saw the financial markets immediately early in the morning realize this, is that there has been an escalation between the 2 countries.
Those intelligence chiefs will be reporting to Tulsi Gabbard next year, I guess, if she gets confirmed. Matt Gaetz, I guess Elon Musk is behind Matt Gaetz now as well. Did we ever get that report? Was that Ethics Committee's report released?
It was not released. There is reporting that the Ethics Committee is going to be meeting tomorrow. They could vote to make that report public. What we did get, though, is the lawyer that was part of giving testimony that represented 2 women that was included in this ethics report has come out with statements to a number of news organizations and interviews. So even if you don't get the ethics report released, I think a lot of its contents, individuals in the Senate will be able to get a hold of.
Want to move on just a little bit because we know you've been reporting on a lot of the other nominations that are coming through and the ones that have not yet. And this week, a lot of the financial community is waiting for some news
on the Treasury Secretary.
Absolutely. And
especially Sonali.
Well, can people be ruled out at this point?
Yes. So Howard Lutnick is no longer a contender. He is the co-chair of the Trump transition. He put his name in the ring, and he's no longer in contention for this role. They are trying to find another home for him. We'll have to see where that is, if that's an ambassadorship or something else. So now it comes down to really 4 people. Scott Bessent is still in a contender for Treasury. Also, maybe, depending on who's at Treasury, NEC. Then you have Kevin Warsh, who'll be going down to meet with President-elect Trump tomorrow. Mark Rowan of Apollo. And then a dark horse candidate of Senator Hagerty. Someone who potentially would have maybe went over to State Department. Someone who could also fit the bill when it comes to Treasury. He's liked in the Senate. He has foreign policy experience and business experience. So these are the 4 names that we are hearing about and my sources are talking about when it comes to the race for the Treasury. So as of last night, we were able to rule 1 person out, but still it's unclear where Trump is going to go when it comes to this top post that really everyone wants to know about, because not just we're sitting here on Bloomberg and we care about for the financial community, but also this is a man who ran an economic campaign. So everyone is trying to understand, well, your economic policy, what does the personnel of policy mean? Who are you going to be putting in charge to carry out and Sherpa all of these ideas you campaigned on?
Well, it's an economic campaign that, you know, Sonali's been talking about this for the last few months. Scott Bessent essentially was one of the main architects of that campaign.
Wrote the speeches, was at the rallies.
Whereas with Kevin Warsh, it's not clear if he really supports the protectionist policies that Trump wants to put through.
And you're seeing a lot of this on Twitter. And we spoke to Neil Dutta today, who is definitely in the Bessent camp. He talked about the fact that this is an individual that it takes a certain kind of personality to deal with both Donald Trump and George Soros, where Bessent started his financial career. And I would just say that when
I
it
love,
comes
by the way, that somebody who worked for Soros could work for Trump. It's so great because.
But they don't all have the same political views. That's the thing
they
about
don't.
Soros.
Yeah,
but when it comes
that's
to Kevin,
the point. I mean, the Trump base hates George Soros more than they hate almost anybody else.
Well, when it comes to Kevin Warsh and your point, a lot of his old op-eds when he talks about free trade and being anti-protectionist, a lot of that is coming to the forefront. So I think you might see some pushback from the MAGA part of the party with someone like a Kevin Warsh. And Neil Dutta's point was it does feel like he wants Fed chair. He interviewed for that job with Trump during Trump 1.0. And so potentially maybe that's still in the running for him down the line.
I think I'm kind of fascinated too at how small this world is, because you have Mark Rowan also being one of the contenders for this job. Dark horse, I would argue, as well, right? But you'll have Jay Clayton, who's the lead independent director at Apollo, what Mark Rowan leads, going over to the Southern District of New York. We're reporting today that Damian Williams over at the Southern District has shared privately plans to step down before the Trump term. I mean, if you're not out of the club, can you get in it at this point?
Well, I think so, because, I mean, individuals like Kevin Warsh, individuals like Mark Rowan, we were not discussing last week to be part of the Treasury race. It was just a two-man race between Howard Lutnick, really, and Scott Bessent. And we've seen that tension became so untenable for the campaign that they were like, maybe we need to broaden out the search and look for potentially other new players. I mean, I can never say never. Maybe another name will be added to the ring. At this point, I think they're probably settling in on these four, but who knows?
All right, Anne-Marie, thanks very much for joining us. Anne-Marie Horton is our chief political correspondent. She's also the co-host of Surveillance. She did talk to Neil Dutta about this earlier on that program. I recommend going back and watching that interview. Still ahead, Blackstone wants it Mike's way, the private equity giant, buying the sandwich chain Jersey Mike's. So delicious.
You know how much I love Jersey Mike's.
I am in full agreement with that. I think I'll have it for lunch. This is Bloomberg.
And it's time now for Social Climbers, the companies making waves this morning. And first up, Nestle. The world's largest food company says it plans to separate its bottled water brands like Perrier into a standalone business. The new CEO is hoping to boost growth after he lowered sales growth targets this year to around 2%. That's the lowest annual growth rate since the turn of the century. And next up, now boarding. Delta Airlines announcing today that it will offer Shake Shack burgers on flights out of Boston starting in December. Service will be expanded to other markets throughout 2025. I'm getting starving, Matt, because next we're going to talk about Blackstone digesting a new deal, not for burgers, but for sandwiches. It's agreed to buy a majority ownership position in the sandwich chain Jersey Mike's Subs. The deal is valued at about $8 billion, including debt. The transaction is expected to close early next year. Do you know where Jersey Mike's is based, Matt?
Paramus?
No, Manasquan, known as the Squan. That is where the Jersey Shore goers go.
I am a massive fan. You know, there used to be one right here on 3rd Avenue, and I don't think any other sandwich shop does a better job, to be honest. I'm editorializing, honestly. I'm very hungry right now, but hopefully, if Blackstone comes in there, they can put more stores in Manhattan.
Well, what's interesting, too, the CEO founder is going to remain an owner and involved with a large equity stake, so he's going to be sitting pretty as he manages the sandwich chain. Fascinating. You had Roark buy a different private equity firm, buy Subway, with an enterprise value of $9 billion. Sandwiches are a huge business.
Yeah, I don't think the two, though, should be mentioned in the same sentence. I mean, it's a wildly different product in terms of the quality of what you get. I want to get a quick check on what's going on in the markets right now, Shonali. We do see a continued drop on the S&P, but only down about 0.4% right now. Remember, before the open, futures were off more than 1% at one point. Investors had piled into the 10-year and really into treasuries across the curve for a little bit of safety after Ukraine sent missiles into Russian territory, American-made missiles, and Vladimir Putin broadened his nuclear stance or his nuclear potential. You still see the yield down at 437. Yesterday, we were talking about it at 445, 446. In terms of the strength in the yen, you still see that as well. You know, yesterday you could buy almost 156 yen for $1. Today, only 153.95. And then Bitcoin, just worth mentioning, as it holds above $90,000 right now at 91,815. Coming up, Florida's transformation into Wall Street South. We'll talk about that with real estate billionaire George Perez of the Related Group.
Over the past few years, a wave of wealthy and powerful transplants like Ken Griffin have turned to Miami and surrounding areas, turning Florida into a financial capital, Miami now known as Wall Street South. And now a new wave of well-wishers and job seekers have flocked to the region to be nearer to President-elect Donald Trump and his winter White House at Mar-a-Lago. Joining us now to discuss this boom in Florida is billionaire real estate developer George Perez. George, who's the founder, chairman, and CEO of the Related Group, has been at the forefront of South Florida's evolution for over 40 years. And George, let's start right there. Let's start with the president-elect. It's not just the president-elect, it's also the red wave you're seeing. But certainly when you think about the winter White House over in Mar-a-Lago, how much more interest are you now seeing in Florida since the election?
Well, President Trump is a Florida resident. I think a lot of his friends, are in Florida. I think he's was a real estate developer. His family's still in real estate development. I think he understands what real estate in particular needs to be successful, which is lower interest rates, lower inflation rates, so people feel confident of buying. The effect in Miami, I think, is going to be positive, but we go way beyond, as opposed to other cities, of the national economy. I just came back from London and Madrid, and the desire for people to own a place in Miami as a second home, or actually thinking of moving when they get to be a retirement age, is immense. My two sons are in a trip to South America, Argentina, Brazil, and Mexico, where the demand for real estate in South Florida is intense. And as we know, and you mentioned, in cities like Chicago and New York, we're still seeing a huge demand for people not just wanting to live here, but moving their businesses here, which is the first time that has happened. To South Florida. So instead of just becoming sun and fun, we are becoming a serious city.
Well, more than a serious city, you think about the business aspect alone, and I'm going to ask you to speak for the business community here for a moment when you think about the president-elect's policies, because some of them could significantly impact different industries, even yours. You think about the immigration policy, for example. A lot of the building environment in the United States has relied on an immigrant workforce. How do you think that policy in particular might impact your business moving forward and others around you?
Look, it's a big concern. It's a big concern. In Miami, a lot of our construction workers are, I would say maybe 80% of our construction workers are Hispanic or more. And we don't check to see if they are legal residents or not. They're employed by our subcontractors. But I give you a little fast anecdote. In Jacksonville, when the governor announced that they were going to be checking on to see if immigrants were illegal or not, the next day we went to the job and everybody had disappeared for our construction job in Jacksonville and had gone to, to South Georgia or someplace. So we very much depend on immigration to run our industry. I think that the stance that some of the more fervent opponents to immigration is going to quiet down. I mean, the United States needs a continuous flow of these immigrants to fill a lot of jobs. Yeah. So do we need to do it legally? The answer, of course, is yes. Do I think that we're going to take all the illegal immigrants in the United States that have been here for many years, doing legal work, productive work? I think the answer is, of course, no. That would make it into a police state with people checking identifications. I can see myself, because of the name Perez, to be stopped in the street and asking me for an identification card. So I think we need to quiet down, this rhetoric. And come to a understanding, because immigration has made this country and will continue to play a big role in the development of this country.
Yeah, I just think it's fascinating, George, because, of course, at the Republican National Convention, the most visible signs that his supporters were holding up said mass deportation. And that's been a part of his campaign pledge to the American people who elected him. On the other hand, I mean, just think about how much labor costs would soar if you eliminated the 11 million immigrants who are here illegally. It would just be impossible for you to continue to conduct business, I imagine. So,
and most people need to see that, right? We have a place in Aspen. And I can tell you that 98% of all the people that are in the restaurant business, the hotel business, in the construction business are immigrants. Would say that a lot of those might not be legal, that are coming to this country for the opportunity. I just cannot see what would happen, if that was stopped. First, the salaries would have to be increased tremendously because there's not enough supply, to meet it. And then, of course, it would have repercussions on inflation and so forth. So I think when quieter, smarter minds get together, I think they're going to really understand this. I think the economy is the most important thing. And I am hoping, Trump is now our president. So I think whether you agree or disagree, we need to all gather behind them and try to do what's best for this country, have hope for this country. We have been in a period that people don't talk to each other. Extremes have become more popular. We need to become much more heading down the middle, listen to each other's ideas, and make the best out of a better solution, to do that. And I think this goes not only for immigration, it goes to health policy, environmental policy, and so forth. We seem to go from extreme to extreme, and I am searching for that middle ground.
George, what about, speaking of the different policies, also trade policy, because it's pretty clear that the right part of the Republican Party, the further right you go, the more protectionist it gets as well. And are you very concerned about what trade policies could look like, particularly when it comes to your business and business in Florida? I mean, a lot of people rely on not just foreign workers, but importing materials.
Well, see, look, you've seen what happens when the supply chain is disrupted, particularly in my business. During COVID, for example, the supply chain was totally busted. We couldn't get all the prime materials that we wanted, and construction costs, exploded. That is passed on to the consumer. Nobody builds a building to lose money. So I am very much anti-isolationist. I think in a free market, in a fair free market, I think that there's some things that we can't produce effectively that we need to purchase from abroad, and our technology and the things that we do better, because we have such an advanced, country, are the things that we should be concentrated in, and that all requires a free change of products, services, and so forth between the most efficient producers of whatever it is that you're producing. So, televisions today are coming from, many different parts. Today, to build a whole television here would be, impractical and extremely expensive. So, things like this, I think, are, everybody knows this, So I want sentiment, to take a second place to logic and see what we really need, to expand. We are in such a position, both in the United States, but particularly in South Florida, that we really are attracting the whole world, to come to this. This means growth. This means production. This means employment, and we need to take advantage of that opportunity. Just like we're doing in South Florida, our market in South Florida, we're opening more condominiums, both luxury and middle class, than ever before, and they're all being consumed, and they're being consumed by both cities from, older cities, both from California and the Northeast, and from South America. We have a huge South American market that wants to come here, and now Europeans are starting to show. And we need to show them that we are a stable economy, that we're all going to be and gather for the President of the United States, that this is one country for all. So I hope extremes disappear as much as possible.
George, I want to ask about something less contentious, although for us, interest rates is usually all we talk about.
It's plenty contentious.
What do you think about the rates market right now? I mean, the Fed was on track to cut rates down to, some people thought 3.5% is what John Paulson told Sonali a couple weeks ago. Now it looks like the market is expecting far less aggressive cuts. And maybe if these policies are inflationary, they'll stop completely next year. How much does the real estate industry need those cuts?
We need those cuts badly, right? Remember, there's a huge number of real estate that has been financed, the construction and permanent at floating rates. And those floating rates have now, if you build a project and you borrow at 3%, and now you're paying 8%, I don't have to tell you what impact that has, particularly if you've overborrowed, right? So there's a lot of people hanging that are waiting for, interest rates to go down. I think the Fed, made the right decision on the 50 basis point. I thought we were going to get another 50 basis points. I think they're looking very closely at inflation. In my opinion, I think inflation has been controlled. I expect further cuts next year. I never thought we were going to get 3 to 4% cuts. So I think it's going to be less pronounced. But I believe that we'll continue to see cuts, and we'll continue to see an increase in demand based on people's able to afford, more real estate because of the interest rate costs. But I do not see, a 2 or 3% interest rate cut anytime soon.
Hey, George, we got to go because of the clock, but I hope next time you're in New York, we can get here in the studio. It's been great talking to you. George Perez there is the CEO of the Related Group. Now, coming up, we have a story about saving for future generations. Norges Bank Investment Management CEO Nicolai Tangen discusses Norway's government pension fund. This is Bloomberg. Time for our daily Wall Street Week conversation. Norway's sovereign wealth fund is one of the largest in the world, with assets totaling more than $1.7 trillion. David Weston spoke with Norges Bank Investment Management CEO Nicolai Tangen about how the fund is managed.
I think you need money to set it up. I don't think it makes sense to borrow money to set it up, because then you need to, in a way, guarantee that you have a so-called spread above the borrow cost. You borrow money in the bank in order to invest in the market, and you can't always guarantee that you'd get better returns from investing in the market than the borrow cost. So I think that's a risky strategy.
I wonder if there's another function of a sovereign wealth fund. In fact, it's described in some of your materials online, which is sort of almost wealth transfer from the current generation to the future generation. Is there a function for that, even if you don't have a surplus?
I mean, perhaps there are some philosophical reasons for doing that, but I do think you would need to have. It's basically to save and safeguard the wealth for the future. But I wouldn't borrow today in order to spend in the future. But if you have one of these windfall gains like we've had on the continental shelf, I think it makes a lot of sense.
You have a mandate, obviously, to maximize return, but also with an element of sustainability on various indicators: economic stability, climate, environment stability. Do those things come into tension with one another?
No, I don't think they do, because we believe that climate risk is a financial risk. And the reason for that is that if you have, we own 1.5% of all the equities in the world, and if we have one company polluting, well, it's being picked up by all the other companies we have. We need to care about, the future. We need to care about the climate. We see that a deteriorating climate is causing worse harvests, it's driving up prices. We see it now in coffee, olive oil, orange juice, and so on. And so it's basically a financial risk, and it hasn't been the case before, but it's increasingly the case.
Do you even take a look at some investments that might have an adverse effect on climate? For example, brown coal. As I understand, you don't invest in any company involved in brown coal.
No, that's correct. And that's a separate entity from us. It's called the Council of Ethics, and they exclude things for ethical reasons. So there are a lot of different types of weapons we don't do. We don't do coal. We don't do tobacco, for instance.
How do you maximize return? What is your investment approach, particularly when you are so large?
Yeah. Well, the thing is that when you are very large, you need to diversify. And so we have spread it out. We have invested in 9,000 companies around the world. We own 1.5% of all the equities in the world. In Europe, we own close to 3%. And then we own bonds, and we own real estate. So we own just under 1,000 properties around the world. In the US, we own things in Washington, Boston, San Francisco, here at Manhattan.
That was Nicolai Tangen. David Weston joins us now. I think it is not often considered how much one fund controls in terms of equities. I mean, 1.5% of global equities. It's different than the BlackRock, right? Because they manage funds for so many different people. This is all Norway's sovereign wealth fund. It's incredible.
It's an incredible story, and they've done quite a remarkable job with it. And that's why we wanted to talk to him, because he is the biggest in the world, $1.7 trillion. But he took us on his own to the question of, does it make sense for the United States? You heard him say it made sense for Norway because they had a windfall in all that oil and gas. That is not true in the United States. And so he was saying on his own, he volunteered it. I didn't ask him. He said he's not sure it makes sense if you have to borrow it, which goes to the U.S. question.
Well, it's interesting. We had heard from your conversation with Larry Summers also about this. Is borrowing the biggest constraint for the United States to be able to create a sovereign wealth fund, or is it something else entirely?
Well, I would say two things. This is me talking now. One is the borrowing. I mean, what sense does it make? As Larry said, you heard it yesterday, the first thing we should do is start cutting the deficit. That's the smartest thing to do. If you want to invest some, there are pension plans at the federal level you could put into investments. That might make sense. There is another element, and we talked actually, Tangen, about this. Does it become a political hot potato? I mean, when you have that kind of money, you can direct it in all sorts of directions. That has not happened in Norway. It's not happened in Alaska. We also talked to the governor of Alaska, Steve Dunleavy, who said it's never happened in Alaska. There's been bipartisan support. But one has to wonder if it got to Washington, if Washington had $1 trillion to invest, whether they might start making decisions based on policy or politics about how they invested.
Buy Bitcoin would probably be. Hey, David, I wonder about Tankton. I've been following his career from, before he was running the Sovereign Wealth Fund. He always warned that it's going to be a tough decade for investing, and now they've done incredibly well. What's his view on stocks?
No, he's still positive on equities. Now, of course, he's so diversified. I mean, it goes across the board. But he's positive on a return from equities, without a doubt. I also asked him, does he want to keep doing this? Because he's got this very successful podcast. I mean, we talked about it earlier tonight. We all listened to it. And he said, no, he loves this. This is the best job in the whole wide world, because he could make a lot more money managing some other fund, I suspect.
Yeah, he could make a hell of a lot more money if he were in the U.S., but he's doing it for love of country and industry. David, thanks very much. David Weston there. You can catch Wall Street Week every Friday at 6 p.m. Eastern. This is Bloomberg.